The dollar turning tumbling to its lowest level in more than a year against the euro. This as investors continue to flock to the safety of gold, which hit another new high this morning above 1070 an ounce. So is the dollar having a case of the hiccups, or is this a long-term downtrend / free fall? From the dollar will survive camp, Mike O'Rourke, chief market strategist with BTIG. And from the dollar suitable for wallpaper in your bathroom camp, Charles Goyette, author of the new book, The Dollar Meltdown. Mike, I think we need to hear the good news first.
Well, the funny thing is, I'm not so far off from Charles in the sense I think the dollar's in a long-term decline, but I think right now it's very much overblown because if you look at the composure of the global economy, there's not many viable alternatives to the dollar right now over the next several years. Europe's not in a better position than we are. Japan's not in a better position than we are. The UK's easing, their quantitative easing is just as aggressive as ours. And then the only strong, large economy is China, and they're pegged to the dollar, and they don't have free capital flows. So in the short term, the dollar's position is probably a lot better off. And if you look at the earnings like we've had now, the position here in the U.S. is probably a lot better off than a lot of people expect.
Charles, are we going to be able to afford to go out of the country anymore?
Well, Mark, necessity is the mother of invention, and he's right that there aren't a lot of good alternatives, but they will certainly be developed. People will not continue to hold a unit of accounting that is continually shrinking and is not dependable. We saw the terrible stagflation and the high interest rates and so on in the 70s as a result of the breakdown of the gold exchange standard here before our very eyes. The gold price is signaling to us the collapse of the dollar reserve standard, the dollar exchange standard. It's going on right now, and we're in for a very tough period ahead.
So it gets down to this question, though, Mike. First of all, let's just point out something that is the dollar is stronger now, right, than it was 2 years ago. Well, so there's a lot of fear that maybe context could alleviate.
That's the thing I find amazing is normally I'm a long-term dollar bear, but I sit there and say the first 7 months of last year, the dollar traded at levels below dollar index where we are now. Mm-hmm. All we did was we had this huge flight to quality during the crisis last year, and that flight to quality is unwound. And basically as people come back to the markets. So it's not like we're at new lows and the dollar's collapsing. I agree with Charles's point long term that there's going to be other options out there, and we as a nation have to acknowledge that and react to it.
Charles, how much is, I'm sorry, go ahead.
Oh, go ahead.
How quickly does this happen in your view? The plunge in the dollar?
Well, actually, these things happen a lot faster. I was reading a review of the German inflation in the 1920s, the Weimar Republic inflation. The fellow said this happened like a flash, like a lightning flash in the wink of an eye. I'm not trying to predict anything like that, but it can get a lot worse, and it can happen a lot faster than anybody expects.
Ordinarily, Charles, I believe in markets. Mm-hmm. I do not believe that governments can set over the long term the value of their currency. Eventually, the market will set the value. However, in this case, you have so much of the world has a vested interest in the dollar. Right. That it seems to me that there's going to be some sort of coordinated effort. The Asian countries, which hold trillions of dollars in their reserves, I find it hard to believe they're going to let it happen.
Well, it's that old cliche about when your bank has a problem. I mean, they certainly have a problem because of the dollar position. And editorials in the New York Times notwithstanding, they're not going to announce the sudden heading for the exit and tip everybody else in the world off. But
where would they? I mean, A, I don't believe they will let it happen. And B, where else can they go? You can't take $1 trillion and turn it into euros. There aren't enough euros in existence.
It can't happen overnight, but you already see this referendum on the quality and the quantity of the dollar taking place. I mean, you see China now, in a surreptitious manner rolling out of government-sponsored enterprises and rolling into more of their portfolio into treasuries. But the whole story that kicked off a lot of this market move, the Robert Fisk story in The Independent, was about a basket of currencies. My book was printed and on the way to the booksellers, describing the development of that same sort of thing, okay, with some other currencies and eventually with a component of gold.
Charles? got to cut you off. Want to give Mike the last word, and we are out of time, so keep it brief, please.
No, it's just there are few alternatives in the developed world. Granted, other economies that are growing are a lot smaller, so they can't handle the capital flows.
Right.
So you need a financial infrastructure, free flow of capital, rule of law, and then a strong military to be an important currency in this world as a reserve. And the fact is, we still have all those things. No one else meets up with the United States on all those marks.
Okay, we got to leave it there. There's a lot more to talk about on this subject. We will do it again. Charles Goyette, new book, The Dollar Meltdown, and Mike O'Rourke, Chief Market Strategist, BTIG.